Bloomberg Audio Studios. Podcasts, radio, news.
Volvo Cars' third quarter profit rose as the automaker benefited from the effects of its $1.9 billion cost-saving program. That's even as Volvo Cars' sales are down 8% this year through September. So to bring it all together, I'm pleased to welcome the automaker's CEO, Hakan Samuelsson, to the program. Good morning, Hakan. Thank you so much for making time for us. As I say, you've done well on profit here, but sales less rosy. Are you concerned about demand? How's your outlook change going forward?
Now I'm quite confident because we know really why we were down in sales. We had very high sales of our smallest electric car last year, and that was made in China, and then we need to move it to Europe and localize it in Belgium, and then we lost production capacity. But now we are back producing that car, so I'm not too nervous about the volume. I'm more concerned that we continue with our actions on profitability, coming back to a solid cash flow. That's my number one priorities.
Well, yeah, you hint at the fact that you're more exposed to US tariffs than many European rivals. You've moved some production already. Is there going to be more of that, more moving production?
Yes, I don't think you should call it moving production, but we will increase the utilization in the factory in Charleston. We need to introduce more cars, but they will be new cars, so they will not be moved from Europe. But we need to really utilize the factory to a much higher degree than we do today. And that's really a very important part of our turnaround in America as well. We need to be industrially present. We need to be an American company in producing closer to our customers.
But of course you do have a Chinese owner, and I believe you're waiting for feedback from the US Commerce Department on whether you'll be allowed to sell future models into the US. Have you heard anything back yet from the Commerce Department?
Now, there is a constant dialogue with our legal expert and with the people in the department, and there is no urgency. I think this is for model year 27 or something, but there is a process going on, and I must say I'm not too nervous about that. We have been in the US for 70 years, and we will continue being present in the US.
Okay, not too nervous, but you're fully confident, are you, that the administration is going to grant you this exemption?
I think you can never be fully confident about anything these days, but that's not what keeps me awake in nights.
So what does keep you awake at night then, Hakan?
No, I'm too old for that, so I sleep rather well. I'm quite confident about the future of our company, and I'm really glad to be back. And I think with our result of 7.4, I think hopefully that is still a sign of a turnaround of the company. Maybe it's too early to say, but it's still very positive, combined with also positive signals on the sales side. September was the first month where we are back into growth.
Well, we've also been reading about how Europe's auto industry is exposed to chip disruptions potentially from China because of the new export restrictions on China-made semiconductors from Dutch chipmaker Nexperia. Has that affected Volvo Cars at all?
No, but not yet. But we are, of course, this will affect our suppliers. So it's not supplied directly to us, but we are monitoring this very closely. And I think this is almost coming back in time to the pandemic, where we had a similar situation. And I think we learned then to really be hands-on and really together with our suppliers looking into exactly how the supply of the ships are coming in. So we are monitoring it, and very difficult to say anything more today. This is a problem the whole industry is facing, so we are definitely not alone with it.
Okay, really great to talk to you this morning. Hakan Samuelsson, the CEO of Volvo Cars, off the back of their results. Thank you so much for making time for Daybreak Europe this morning.